So welcome everybody today to the investment property realtors who are going to share advice. And there's a few more people coming on. That's great. And I just want to welcome you so much to LeAnn Riley's Real Estate Investing Club. And we broadcast live the second Wednesday of every month at 7 o'clock with expert speakers that are active in real estate investing. And what's great is you can participate from anywhere and even in your jammies. And what's great is we're live, so you get to ask your questions and we're going to answer on the spot. Because really the truth is, you don't need a ton of money or knowledge to get started as a real estate investor. You just need to know the right formulas and you need to follow a system to be a smart investor. And a realtor is a pretty darn key piece in that process. So I'm LeAnn Riley and I help busy people build real estate income without being stuck or fearful by mastering the proven step-by-step system to get cash flow deals, because that's what real estate is about. I'm a real estate expert who helps clients buy, sell, and invest, and I lead the Encore investment team here in the Twin Cities, Minnesota. You know, we have people from all over the US here on the call. And I built a multi-million-dollar portfolio of properties, including residential, multifamily, condo development, commercial, and vacation properties across several states. And today I'm a national coach and trainer, and I teach my proven profit formula across the US. I help you get started as an investor, choose a strategy and a location, and acquire properties. So I'm really glad you're here tonight. And I want to talk about a few logistics, and then I'm going to introduce Andy here. So if you're looking at your control panel, you might want to activate your chat box. It's down there at the bottom. It says chat. And that's how you're going to be able to ask us questions, okay? And then over on the right-hand side, you'll be able to type a message in the bottom. That's where you can type your question. Okay, and I'm going to introduce Andy, and then I'll open with a few questions to get us started, and then, you know, we'll open it up for you folks, okay? But before we get started, I want to take a poll of who you are, these participants, who's listening. So right here on the screen, I'm going to put up a poll. And what you do here is you simply answer the question, what type of real estate investing interests you? And that helps Andy and I get an idea of who we're talking to, how we can gear the questions. So go ahead and you just click on whichever one of those fits you or more. You can, yeah, you can click more than one. So go ahead and somebody click that. She can't see it. Okay, let's see. I'm going to relaunch. Do you see it? Yep. Okay, yep. There you go. It wasn't up. So go ahead and just pick which one is you. And that really helps us figure out who we're talking to so we can gear this right to you folks. There's more people joining us. Welcome. Go ahead and answer this question. We want to see what strategies you're working on so we can speak into that. Okay, go ahead and get your votes in because I'm going to end the poll here shortly. Oh, there's still some voters coming in. Got a few more people joining. All right, so what do we got here? Now I'm going to end the polling and it will show us the results. This is great. Every person there voted. So here we go. And now I'm going to share the results. Can you folks see them? Mm-hmm. So we've got quite a few people just getting started. We got some fix and flippers, some wholesalers, buy and hold folks, a couple of house hackers. the BRRRR strategy. We got some people on that. And multifamily. Mine's red. Is yours?
Yeah.
That's because that's the winner, multifamily. Okay, we got some single family and a couple of realtors on here. So multifamily, people are interested in that. That's great for us to know because both Andy and I know multifamily really well. So thanks for voting. That helped us out. Now let me shut that down. And then I'm going to introduce Andy. So we have a speaker today. His name is Andy Prashad, and he's an investor. He's a realtor, and he's actually the president of Counselor Realty in Minnesota. And he owns rentals, and he helps clients find deals. And even on top of that, he manages properties too. So we're going to ask him about that. He's been a realtor for around 25 years, folks. So lots of experience right here between the two of us. He was named MAR, that's the Minnesota Area Association of Realtor, 2011 Realtor of the Year. It takes a lot of skills to be the Realtor of the Year for sure. And he's served on the Minnesota State Arbitration Committee. That's when you get in a snag about a real estate deal, you might go to arbitration. So I bet he knows lots of stories from that. And he currently serves on the RMLS Agent Advisory Council. That would be the MLS. You all know what that is. That's how you search for properties. He got the 2012 MAR Emerging Market Scholarship, and therefore he got to go to Washington, D.C. and really kind of hear inside what's going on for realtors. So I want to tell you, how do I know Andy, right?
Yes.
Well, I first met Andy quite a few years ago at some sort of realtor education event because he goes to a lot of them, and so do I. And he's always been a leader with his clients. And I really want you to know his secrets and how he handles a personal portfolio, sells real estate, represents his brokerage as the president, and he manages these properties. He's a busy guy. But also, Andy's a man that I've always seen, he lives a life he loves. He's always smiling and laughing. And I believe in self-growth and transformation, and so does Andy, because I often see him at seminars given by Landmark Education because we both participate there. So I know he's up to big things in his life. So I have some questions for you, Andy. So let's start out with, you own investment property, a few townhouses, a duplex, a single family. How long have you been investing?
For 25 years, a little over 25 years, actually. So when I got out of college, and then shortly thereafter, I got married and decided I was renting and decided, I should get into something because I've gone to seminars and I've listened to people who should buy rentals. I've actually listened, that was 25 years ago, there was those gurus on the late night TV,
Carlton Sheets.
Probably Carlton Sheets, yes. So what I did is, says, you got to have this income producing property. So my first purchase was actually a duplex, a side-by-side duplex. And so we thought, great deal, right? And it was. We lived on one side, rented the other side, but it did not totally cover the rent, almost did, right? Now, for folks that are not familiar with some of the rules and regulations in Minneapolis, for example, back then, if you own a rental and you live there, you get a tax break. But if you do not live there, it went up like 2.5 times whatever the taxes were.
Wow.
Right? And then the insurance also goes up about 1.5 times. So we bought it and we told the realtor, so who was a residential realtor, hey, we're going to buy this thing. We are going to live here for, less than 5 years. And when we start a family, we'll eventually move out of the city and go to the suburb. And we will like to keep this as a rental. Well, him being a very nice guy, but him being a residential realtor, not really understanding the difference between homestead and non-homestead, didn't really advise us. So anyway, 5 years went by. We purchased our single family home and kept the duplex. So when we move out, things were okay. The next year, the tax bill came and the insurance. And now both sides were rented, but it did not cover the mortgage.
Oh.
So then we had to write a check every month. And this was back in the 90s. So I had to write a check every month, hoping the market was still slowly turning around. So, couldn't really sell it because from an investment standpoint, it was negative cash flow.
So
And
nobody wanted to buy it.
nobody wanted to buy it. And of course, the other thing is interest rate was much higher back then. And not only that, if you're an investor, now it's maybe 0.25% or so than versus the regular residential rate. So if it's 3.75 today, and you want to buy investment property, it's like maybe 0.25% more. Back then it was 1 or 2% higher. And so we wrote this thing, and I thought, okay, once it's break even, and maybe if it's going to make a little money, then it becomes attractive, we'll sell it. So fast forward a few years went by and was making money, but then the market started to climb. And I thought, wait a minute, this is going pretty well. So I kept that. And I still have it today, actually.
Oh, wow. For 20 over, that's a great story. And it's worth a lot more today, isn't it?
It has quadrupled in value.
Wow.
And rents are about almost 3 times than what it was, maybe almost.
Wow.
And
That's a great story. So it didn't look pretty in the beginning, but it was sure worth the long hold. Is it paid off now?
oh yes, definitely.
So
And
now
now I
it's
get to leverage that, right, to purchase other property.
there you go. Did you guys hear that? He leverages. Yeah, exactly. Once that's paid off, leverage it to buy more.
Yeah, because the thing is that not only that, but most folks know about depreciation, which is like 27.5 years on residential. So I don't get that much depreciation anymore anyway.
Right. Sometimes investors with a story like that, then they would sell that one just so they could start the depreciation over.
Yes.
Yeah. But you're leveraging it.
I'm leveraging it. Yes, definitely. It's been pretty good. I mean, it's paid off.
It's cash flow.
It's cash flowing. Yes.
Yep, cash is king. That is great. So what is the most challenging aspect of owning rental property today for you personally? What's the issues?
Well, myself being in real estate, I have a lot of resource, contractors, handyman, so forth. So that's not a problem. If there's some repairs to be handled and so forth, I myself is not quite that handy, but I have resources, and that is not the challenge. The biggest challenge that I find personally, and I had this experience not too long ago, where I had a tenant who has been there for, oh my God, almost 10 years. And, you get to be friends and you know them over a period of time and so forth. Now life happens, and he lost his job and all of that stuff. And I try to work with him so he can get back on his feet. And he's been a good tenant, but now it comes to the point where I'm not getting any money, a month, two goes by, and it's difficult to, now I have to say, hey, you got to move, or I have to take you to court and so forth. And it's a very, very hard thing to do when they've been such a good tenant and it's nothing of their fault, and that personal relationship. Now, that is one thing that, like, oh my God, it did not feel good to do,
Definitely.
And so if I have to do that, well, going forward, what I'm doing is I'm actually having others manage my own property.
Oh, okay.
Yes.
To be one step removed.
Exactly. Because when I started out, you want to be good, you want to be nice to your tenants so they can take care of your place, right? And you want that good relationship. But when things go bad, then it gets pretty ugly. So I think that personal relationship, I just want to make that distinction that I'm not going to do that going forward. It's got to be all about business. Plus, us also, you have to think about your time, um, and evicting somebody is a process, and you got to go to court, and you sit there in court, especially in Hennepin County, which is a very large county here in Minnesota. And you could go to court, and you could be there at 8 o'clock in the morning, and then get called until 2 o'clock. That's because there are so many cases.
I use paralegals to handle all of that. And there's a place called the Landlord Network
Hmm.
here in Minneapolis, and they do it all for you, and you only pay $100 over what all the costs are. They go to court for you, they do everything. So, it's resourcing.
Yes. So lesson
So
learned. I'm not going to manage my own property.
yeah, it makes a lot of sense. It really does. So, so that my next question was, what's a tip you can share for people who are managing their own over all those years? What worked the best?
I would say that given the technology today, I would really leverage that. All your communication should be either text or email. Even if you were to say that I'm going to do this, or you had a discussion with a tenant, I would just put that in a conversation. Hey, based on our conversation, da 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 da. This is what we agreed on. You had a problem, it was fixed. Now we're all good. Because if you have to take them to court, 9 out of 10 times they're going to go, oh, he didn't fix this, he didn't fix that, whatever. So the communication is very key. And I mean, it's kind of sad, but we have to, cover our tracks, basically.
Yeah. That's a skill us realtors have is, we're used to communicating via text or emails, and we do document everything. We have to.
Yeah.
So it kind of comes probably naturally. And I love what you said, though. Use today's technology because, I've been a landlord from way back in the days to the 80s. And, we didn't have the technology that they have today where you can have your tenant use Cozy and pay the rent and it goes straight to your bank account. We still had to go pick up the check or get it in the mail or something. You don't have to do that anymore. And that really makes it easier, auto pay and all of that.
So one
So,
thing I would say about the auto pay, and I'm guilty of this. So I used to give folks my bank account, and so they would electronically deposit. But I get busy, so I don't check it, daily, or because I have multiple properties, and sometime I might miss that.
they didn't pay.
So what I do now is I request that they do an auto pay so they could set up with their bank, but I receive a check from the bank on the first.
Oh,
So
one of those, the
yes,
check you can print and then handle.
yeah, yeah.
Yeah,
So
and
at
that
least I
works the
know,
same.
I get it because we all get busy. I mean, if I had one property, then it's okay. But with multiple properties, and in one case I had where I was getting rent. The rents were the same for two identical properties. I didn't know which applied to which property because they were $1,500 each. So yeah, so that's something that I don't give the bank account anymore, and they have to just mail the check. And they said, well, who write the check these days? Well, you can go to your bank, you set it up, the bank will send the check. So yeah.
That's great. That's good. A good way to do it. So now what's one thing you tell investors when you're helping them select a property as a realtor? What would you tell the investors that might help them?
Well, I would say one thing that I'm very bullish on is basically my philosophy is the numbers got to work. And it's still old school. And the last time I checked, 2 plus 2 equal 4. So if 2 plus 2 does not equal 4, it's not a good deal. People ask me, is this a good deal? My answer is, I don't know. Show me the numbers. Let's run it. And everyone gets if you're investing, everyone gets, depreciation is there for everyone. You get all the deductions, so that's across the board. The other thing is I don't count on appreciation. I tell people do not count on that. Now, it's got to be on the economics. And
Yeah.
even in a market where we have hot areas in the Twin Cities here, like Uptown, for example, is a hot spot and high demand for rent. But I tell people, you plug in a 5% vacancy, because even if it's full capacity and folks are moving in and out, you're going to have some expenses anyway.
You
Painting.
know, I agree with that because you know what, too, when you're borrowing money on an investment property, the bank is going to put a vacancy in there. So you better have it in your formula because otherwise your numbers won't work. Totally agree.
And I use the industry standards for repairs and so forth, regardless if it's a townhome, single family, whatever it is. I still use whatever our industry for, our specific area. And that'll vary across the country.
Yeah, oh, it does. The repairs do. We actually have a question here from Corey of what's the benefit of depreciation?
Well, you get to shelter basically your income. So if you are a W-2 employee, and you get to deduct that against your taxes. So
Yeah, and I say a lot of times high income earners will choose to invest in real estate with turnkey rentals, something they don't manage, they don't pay attention to, but sheerly for the depreciation that comes off of their high income to help get it down some.
yeah, and I have some clients who are like, I don't care if this thing loses money. I want the depreciation and the loss.
Yes. Yeah.
For tax shelter purposes. Yeah, basically paying the income tax, less income tax. Yeah, definitely.
But I'm just like you, Andy. I'm not going to tell anybody that it's a good deal if it doesn't cash flow.
Got a cash flow. And the other thing is, people have to they have to know what percentage they want. What's their rate on return? Is it 5, 6, 7? And do they want to be hands off, or do they want to be involved in the process as well? So that has to factor along with the numbers as well. Yeah.
Yeah. So is that how you ended up managing properties? Some of them want to be hands off, some of your clients.
I tried to get them to be hands on, but but what has happened with some of my clients, they actually have been relocated because of job or
Oh,
job
sure.
opportunities. And I made the mistake of telling them that I have investment properties. And, I manage my own property. And, this one guy, he goes, okay, well, that's good to know. Andy, here's the key. Then you will take care of mine. Sort of forced me to do it, and I reluctantly did it, of course, and he was only in the house for a couple of years, so we couldn't turn around and sell it. So we had to
Yeah.
the market to rise. And, but then he went and told other people. I don't advertise that I only do it for my clients, and I do it for a very, short period until we get in a position where they're disposing of it. Or I say, I'll find you the property. I'm very good at finding the property, finding those deals, but I turn them over to management companies because it's not a very effective use of my time, even
Yeah.
though I'm very good at it. Over time, you just develop that knack, if you will, of identifying, good tenants, basically. I mean, you can run, all the background checks and everything else and so forth, but at the ending of the day, it's still that person to person, checking them out and see how it is and having that conversation.
There is some intuition about it, but there's also, as a manager of property, even if you only have one duplex or a couple duplexes or something, you need to, as the owner, set the standards for the tenant and how that relationship is going right from the first time you show it to them.
Oh,
Like,
absolutely.
that's one of the keys I always teach in my programs is, it begins the minute you talk to them on the phone, even before they looked at it.
Yeah.
And if they know that the rent is due on the 1st and you're going to be calling them on the 1st if it doesn't arrive, you'll move to the top of the list, and then it will come on the 1st, and then you're all good.
Yeah.
So yeah, it's I love people who have a heart, but boy, it's a tough job when you have a big heart, when you're a landlord.
Well, I've been there. I've done that. I've spent a lot of time in court, and the thing is too, like when if someone does not pay, it is not just that month's rent, because so they have missed a month. Now you have to take them to court, which you may be lucky to get a court date in that very month, so it could go into the next month, and then you get the court order for eviction. A lot of times, some of the times they don't even move, so now you have to go and get another sheriff order to get them out.
Yeah.
Now they're out, and then depends on what condition. I mean, they're not very happy, so most of the time they're not leaving the property in very good condition. So then they leave. Now you got this mess, which may take another month
So
to
that's 3 months of no
3 months
rent.
before you could even show it, right?
Yeah.
And then it's another month before you rent it. Because I've made the mistake where once they're evicted and the property was not in good shape, and I showed it, and people will come and look and they go like, "Oh, you're gonna rent this place?" And the thing is, when you're showing a property like that to people, to potential tenants, they're gonna go, "Oh, that's my standard."
And
And
it's not how,
it
yeah.
is not. But then they go, "Well, that's okay because it's like this," or they get in their head, "Well, the other tenant left it like this, so
I can leave it like that.
I could leave it like that." So yes.
Okay, for all of our listeners today, I know you came here to hear about, why would you need an investment property realtor? So I thought I came up with 5 things here for Andy and I to chat about, some of the differences between a residential realtor and an investment property realtor. Now, that doesn't mean that both of us don't sell residential property. We do, but there's a different set of skills for investment property. So I found these 5 key things. So let's chat about them. The first one is investment property realtors will help with all the disclosure and the paperwork in today's heavily regulated environment. So what would an investment property realtor do different?
Well, a lot of cities have lots of regulations governing rentals. You have to have, it's a different kind of inspection than the inspection that you have when you're selling a house, for example. You have to know the zoning regulations and everything, and that is very important. A lot of cities now you have to have a license also in
Mm-hmm.
order to rent your property. And so there is a person that just does buying of selling a home may not know these type of things. And if you were to rent without a license, I mean, the penalty is severe in a lot of places. As you know, here we have the Bloomingtons and the Richfield and the St. Louis Park that are heavy regulated. Um,
Yes.
and that, if one is not familiar with those type of things, it could cost your seller a lot of money, fines, all those type of things.
Oh, especially, I have seen this out in the market. People might advertise something as a duplex or a triplex, for example, if there's something up in the attic. And when you check the zoning, it's really only a duplex. And that's a big difference in the numbers, particularly if it burnt down.
Oh
You
yeah.
can't build another threeplex or whatever there, although Minneapolis has some new zoning laws where you can build larger now, and that's what we're aware of is some of these newer laws, the 2040 plan they call it in Minneapolis. um, you want somebody who's in the business who understands what's coming up, because another big way to make money in real estate is to be on the cutting edge.
Yes.
And if we know things that are coming, like take that 2040 plan, where that's the city of Minneapolis. And now they made a new ruling where you can build perhaps they call it an ADU, accessory dwelling unit,
Yes.
maybe back by the garage or, on your property. And zoning wise, that's okay. And it never was when it was single family. Well, some smart investors might be, I've known some already, they're buying tiny houses now on good lots
Mm-hmm.
with that in mind in the future, and they can still get the tiny house for a decent price right now, and that's their plan, go up or out.
Oh, exactly. And those things, 2040 plan, of course, in Minneapolis, you have to really know the in and out, especially in the city of Minneapolis,
Yeah,
all the rules, so many things that govern that,
and they
that,
can cost extra money if you don't understand them.
and to your point, in the 2040 plan, a good realtor that's that does a lot of investment, they could look at trends, what's coming, or, growing areas and so forth, and in anticipation that the property will appreciate. But like I said, I don't plug in the appreciation. That's just gravy, if you will, for the future. But they have their ears to the ground, and they really know what's going on, because for investors, for long-term growth. And I don't buy and flip. I've done some in the past, so I'm an investor with long-term hold.
Okay, you buy to hold.
Yes. And that is something that I could, advise my client, because I have done investment. In fact, I should tell you that just recently, to give you an example on that, just recently, I had a client of mine, his daughter graduated, and probably about 15 years ago, he bought a townhome. I said, "You have equity in your house. Why don't you invest the money? It's just sitting there. Buy a townhome, put it on a 15-year mortgage, and when your daughter graduates, then you can, um, there's college money, or if she gets a scholarship, well, perhaps, more to your retirement." Well, lo and behold, he actually, I went to the graduation last year, June, and we were chatting and stuff. And he says, "Well, thank you," and all that. And I thought he was telling me thank you for coming to the party. But he said, maybe you don't remember, but 15 years ago, you really advised me to do this. And here we are, like 15 years, and I forgot. I mean, I totally forgot. I know he bought it from me, but I kind of forgot about the whole thing. And I'm like, wow. So, my strategy is long-term hold. I know there's a lot of people talk about, the quick things that you see on the TV and all that, but in reality, I haven't had that kind of success, put it that way.
Definitely. We got a question here, and this is kind of a realtor question. I heard that anyone advertising a property for sale must put it on the MLS within 24 hours of putting it on the market. And that's
Yeah,
a new thing, isn't it?
that got passed at the National Realtor Association last year, at the last year convention. It is effective, the law goes into effect January 1st. In Minnesota, it does not take effect until May 1st, because we have to work it through with the MLS.
Okay.
So yes, once that's in place, that is true. And there are a few states that are not yet, it wasn't unanimous, but the majority voted for that. So that, and it might vary state by state when it gets implemented, but that is correct.
So how do you foresee, if that's a rule for all real estate, how's that going to affect investing, pocket listings? What's going to happen?
They're basically going to go away, because I think one of the things that Realtor did not do, is did not educate their clients in terms of exposing the property to the entire market. Um, and in order to get maximum dollar, one should do that. That's I strongly believe in that.
Yeah, let everybody know and see what the market will bear.
Yes. Now some states, and we still have it in Minnesota, if you want to put a property on the market, you could still do the withhold if you're doing some repairs or the remodeling is not complete and so forth. That could still happen, but you have to follow the appropriate rules and everything else. But once you put it on the MLS, it's got to be within 24 hours. Yes, it's got to be for everyone.
Right. Yeah, across the board. So that goes to the second reason why you need what makes realtors professional is that we're well educated in real estate and experience with the entire sales process, because lots of things can happen along the way, can't they?
Yeah, and particularly I was thinking about this. The other thing is, like, what if they're selling a current investment property and they have to do a 1031 exchange? So for folks on there, to avoid paying taxes, the capital gains on the property you're selling, that's a very complex process. And there are things that have to happen, and it has to happen like clockwork, or else it voids that capital gain.
Yes.
So only a person that's in that real estate investment space can really understand that, have a good grasp. And then even mortgage companies and title companies that work with these type of things, it's very specific. Again, it's not like buying and selling a house. It's quite different.
Yes, it is. And there's rules, and yeah, it can get very complex. So great point. And we know what a 1031 exchange is, and we know who to refer that also understands it, because there's a lot of players in that transaction.
Oh, absolutely. Yeah.
Yeah. Okay, another thing about realtors, they act as a buffer in negotiations with all the parties throughout the transaction. That's
Oh,
for sure.
yes. And so the residential is a lot more, a lot more emotion just involved there, right? People get, they like this and that. For an investor, this is a business decision, and everyone invests to make money, and to safeguard their money as well. And a realtor who is in that space also have to really understand, the negotiation, the timeliness of the negotiation. Things have to happen like clockwork, and there are a lot of rules that are governs that. Now if we're talking, and I do commercial as well, so if you're talking commercial real estate, that even gets a little more complex, and there's so many contingencies, if you will, that has to happen. A has to happen before B happens, and C, and so forth. So it's a longer time period in terms of how long it takes to get some of these transactions closed. But there again is where experience, and in my early days, I had to learn. I made, like everybody else, you make some mistakes along the way, but you learn, and that is what folks get with folks that are experienced. That have
Yeah, it
been in
does
the
make a
field.
difference.
Yeah, and we have done it. I mean, that's the thing. We were in the trenches. We're doing this. There's no substitute for just doing it. One could do all the, you could watch stuff on YouTube and all the theoretical stuff and all of that. And I've done that too, like the Carlton Sheets of the world. But it's a whole different ballgame when you're in the trenches.
It is. And the negotiations, Andy and I were talking yesterday preparing for this, and one of the things going on in the market, and this is nationally, everybody, it's multiple offers,
Yes.
right?
Mhm.
And you better have a darn good realtor to help you through that, because I was looking at the trends for 2020, and it's not going to get any better.
Right.
Inventory's low. It's going to be tough for buyers to win.
Yes.
Okay, we got a question here. Will the new advertising law affect for sale by owners at all? That new thing about the MLS?
Yeah, they're not governed by that rule because they're not licensed. So
Right,
they,
they're
but
for sale by owners.
yes, different rules.
Okay, he's got another interesting question, and Andy's a good one to ask. Have either of you been a part of syndications? And when do you think it's a good time or a bad time for an agent to begin syndications? So first, Andy's got a great syndication story, so I think it's a good time to tell it now.
Yeah, well, I think it was about 8 years ago, I did a syndication. They are very complex. You have to, first of all, you have to have the right.
Explain what it is first. It's
Well, probably the easiest way to explain that is, there's a legal aspect of it. So basically, you're bringing a group of people together who wants to invest, leveraging more dollars to buy higher value property. So there's a lot of legal things that have to be put in place. The partnership, the type of partnership, are you going to have an LLC, S corp, whatever that entity is going to be. Now, and then pool together, get the money, then you invest. So I put together a syndication. I'm in Minnesota. The property was in Texas. I had people from California, Colorado, different parts of the country. And we invested in 100 and I think it was like 50 unit in Texas. Now, none of us lived in Texas, and it was a good deal. We ran the numbers, we did our due diligence and everything else. What I found is, syndication is just like a partnership, for without getting too very complicated about it. What I found is that I brought the real estate aspect to the deal. Some other folks had a little more financial experience, and we were 6 partners, but the other people had just put money, and we needed the money obviously, but they did not bring any other expertise or did not contribute to the deal. So I found myself over the course hiring and firing the management companies because they were cooking the books and no one was there. So from an investment perspective, the lesson that I have learned, I will never buy a property that I can drive to, maybe 3 hours max or so, but not out of state, unless there is somebody that I really trust that's there, where the property is located. But syndication, to answer the question, is essentially, getting a group of people to have more dollars so you can leverage up and you can buy higher value property. You have to have attorneys and you have to have accountants, and all of that has to be set up in advance. And you have to have things like, if somebody wants to leave the syndication, how that is, and exit strategies, all of that. Yeah.
I think you nailed it. It's, you're in business with other people in a syndication, and you better trust the hell out of your partners. It's like getting married. This is money, folks, and big amounts usually in a syndication. Whoever's running that or running the units, like you say, managing them, because that's really where the stuff happens.
Yeah.
That's where the expenses are controllable, is in the management.
Yeah, and I would add one thing to that. Of course, a lot of people, when they think about investing, the first people they turn to is friends and family. And one better have a good-hearted discussion in terms of, hey, if this thing doesn't go as we planned, our relationship is still going to be intact. Because I've seen so many times it has ripped families apart, destroy friendship, and so forth. So one has to really bring that up in the discussion. Yeah.
Okay, folks, don't forget, you can put a question in that chat box, but luckily I'm ready and I got lots of questions for Andy, and I see everybody's hanging on. So they like what we're talking about here, Andy.
Good.
So I got another one about a typical realtor. One of the things about a realtor is they understand today's real estate values when setting the price or making an offer. And as an investor, especially if you might happen to be a fix and flipper or some sort of a value add investor, I'm sure they're asking you just as much as they're asking me, what do you think this is going to be worth when I'm done? Right. And, that is a key thing here, that, a regular residential realtor is not going to be fluent at helping you to figure out the after repair value of something,
Exactly.
because they don't do that every day. They're more selling straight to that, like he said, emotional, someone who's going to move into it. And they don't care so much about that after repair value as a flipper or something. You care a lot. It even as I have people who invest and hold, but they still might want to pull equity out of it. So it's important. What's that value going to be when I finish my remodeling?
Yeah. So a realtor that's in the investment space, I mean, people invest for, they want the tax benefits. They want to have the depreciation. They also want to have the appreciation as well. And, someone else is paying down your mortgage, you're building equity. But in terms of a realtor that has that knowledge base in the investment space, like you said, if you look at a property, like I said, I don't place a lot of emphasis on appreciation. But if there's a good deal to be had, but it needs some work, a realtor that's in the space of investment can tell you what's the after repair value, what it's going to cost, first of all, and how much the house is going to be worth after all of that is done. And they're pretty darn accurate in terms of their numbers. Now, keep in mind, it varies by region, it varies across the country. I'm only knowledgeable here in the Twin Cities. And even within the Twin Cities, the metro area, the central area versus the suburbs, there's so much variation as well. So yeah, it's very, very important.
There's a lot of factors when figuring out values, but the more you do it, the better you get at it, and that's part of our job, figuring out values.
Well,
Yeah.
it's just like, it's an investment property and the carpet needs to be replaced. Well, you can get something pretty decent for $5, $6, $7 per square, per square foot. That's average. You're not gonna, in your home, you may put a $20 to $25, per square foot carpet, but for rental, no, you know.
Yeah.
Um,
You have to understand that, definitely. Okay, and then there is another one about realtors. They simply and effectively explain today's real estate headlines and decipher what they mean to you.
mhm. So that gets back to what you said earlier. I mean, I deal with investors. I deal with realtors that are in the investment space. There are realtors that are not in the investment space, just residential realtor. Right here in the Twin Cities, so hey, what do you think about the 2040 plan? And they're looking at me like, what are you talking about? you know, I'm like, it's on the news, it's been in the papers and everything else, but they don't know what that means.
Yeah.
Part about Minneapolis has put together a 2040 plan, but it does not really mean anything.
They
But
don't even know it affects real estate, and it highly affects real estate.
real estate investors more so,
Yeah.
right? Like for example, we have the Southwest Rail that's going, which will be done in about a couple of years, and we're already seeing the big people, the big corporations, is already in that space, investing, building apartments along the light rail and doing all this other stuff. Now there are still opportunities for the little guys, and that's there again is a realtor that's in that investment space will be abreast and current and like know all these things. Yeah.
I have one last thing here, and then we're going to answer the questions. And that's the other thing that I know is true of investment property realtors is we have resources that you might need in the investment arena. And also, access to off-market deals. There still is wholesaling going on, and those are not like a pocket listing. It's a private party selling something more like a for sale by owner, but a lot of the fixer uppers might end up in that bucket.
Hmm. Well, we both attend a lot of the investment club, a lot of the meeting, the networking. You have to be in that space to network with others. So, there's a good property coming on. They'll go like, hey, LeAnn, I know that you got buyers, you got investors. They're going to call you, right?
Yeah.
They said, I don't want to put this thing on the market. I don't want to deal with all the headaches. And, it could be a situation where it's an estate property even.
Oh, yeah. Yeah, there's a lot of times people want quiet sales. Sometimes they don't want people traipsing through. Yeah. Or sometimes I have a property that the tenant just won't cooperate with showings, period.
Yeah.
So she can't put it on the MLS.
Well, I met, I didn't tell you this, but I met a guy at one of the investment club, the Mineria Club, I think it was a couple of years ago, and he lives in Bloomington. And he had a situation where his son was, basically ill and so forth, but he had the right to sell the property and so forth. He kept my number and he goes, hey, I know you're in this space and whatever. I just want this to be a quiet sale. What can we do?
Yeah.
So we are, I mean, that's how we run to each other just about everywhere, right? We are this club and that investment club and all the different seminars and so forth. So a regular residential realtor, I can tell you, do not go there. And I
Yeah.
go to seminars where are put together for residential realtors. I go to seminars that are put together for multifamily. I have helped clients buy large apartment building, 50 units, 75, 100 units, whatever. I mean, I have one guy who is one of my clients who's a multi-millionaire. 20 years ago, he bought was about an 80-unit apartment, which was worth 30,000 a unit. Now today is
Wow.
130,000 per unit. Run the
Wow.
numbers. Yeah, but
Yeah.
that's great. That's good for them. They got the money and yeah,
Yeah.
but the people, the investment realtor who's in that space, they're out there, working with the
That's
rehabbers,
right. And
collapsers, and all of that.
I agree with you on the bigger deals. Sometimes they're not on the market, but if you happen to have someone who needs a 1031, they're hard to find a bigger 20 unit, 30 unit, whatever. I've had to call around and, rustle them out of somebody, and maybe the realtor himself owns them or his close friends. And then it's not like it's on the market, but if you have a nice cash buyer and then they might say, yeah, okay, how about this one? And there it is.
Yeah.
So yeah, that's still going to happen. So let's answer a couple of questions. Somebody wants to know about being a commercial realtor. Do you need a separate license or designation?
No, in the state of Minnesota, you don't need a separate license. I don't know about other states.
Yeah, here we don't.
Yeah, but if you are going to the commercial space, I would advise you get what they call the CCIM designation, which is a commercial designation for in that real estate space. And I will say in terms of commercial real estate, one has to, I mean, I can't do everything in the commercial space because it's so diversified. You got multifamily, you got retail, you got medical, you got manufacturing. Even if you take manufacturing, for example, there is manufacturing for nuts and bolts, there is medical manufacturing. So even that is subdivided. So it's a whole slew of area. And my advice would be you have to choose what you want to specialize in. So for example, I do not do medical or dental. I refer that out.
Yep.
I don't do office buildings. I refer that out.
So do I. I'm more multifamily. That's the part that I know.
I do multifamily. I do some strip malls and smaller projects like that, you know.
Yeah. I've
But
owned strip malls and things. Yeah, they're good. Little strip malls. I like those. Still like them. And they got apartments above them, and that's even better.
that's even better. That's the way to go.
Okay, somebody said, and we were going to wrap up with this about where's the market heading, you know, Minneapolis and even nationally. There's kind of some key factors. And, you know, number one is the mortgage rates.
Mhm.
They're going to stick around at, you know, these wonderful, lovely lows. Because I mean, I was investing when the rates were 18%.
Wow.
And I never thought that must have been in the late 80s, but never thought twice about it as long as it cash flowed.
My first one was 12%, and then it went down. And when it went to 9%, I refi, and I was jumping for joy.
Yeah.
But in terms of the rates today, all projections are that it's going to pretty much stay relatively flat for the entire year.
Yep. Around 4%. Yeah.
4%. So if you look at a year ago, it was 1% higher. You know, so I think it's a very good environment for investing. I mean, it's like it's like free money. I mean, there is no other way to put it, right? And it's good, but at the ending of the day, of course, it's still the numbers, the numbers, the numbers. It's still got to work at the ending of the day, you know?
You know, that's probably the most popular part about my proven profit formula is how to tell a good deal from a bad deal. And it's all about the numbers and the science of it all and really, really understanding them. And because I've done this for so long, I can look at the MLS really fast at the numbers and pretty much tell if it's a good or a bad deal because I'm used to it,
Oh,
you
yes.
know. Yeah, and I know you can too, and that helps because we don't want to run all over looking at things. Right, we want to only go look at the ones that are worth driving over to.
Well, I know, LeAnn, I know for you that, yeah, you don't just, somebody calls and you just don't go, oh, let's go see it. I know that you run the numbers. I know how you work, what you do, which is very, it gets back to you got to ask, you know, their objectives, their goals, and everything else.
Yeah. And
Meet that.
everybody has different investing goals too. You know, all of you folks, I love that the poll at the beginning. Some people, you know, you start house hacking, which is what you did in your very first, you know, right there in that duplex.
Yeah.
And I love that you kept it for so long. I had ones I kept 15, 20 years too. And it was fun to, at the time I bought it, I thought it was the top of the market. And then to see what you sold it for, it's like, oh, huh.
Worked out.
Yeah, it did. So we have the mortgage rates, which are going to be stable. We have, what about prices, home prices? What would you say is going on there?
From all indications, we're probably going to look at about a 5 to 6% max here in the Twin Cities.
Yeah.
It
So
might be
you're
different
talking appreciation, right? There's,
appreciation,
yeah.
yes. Yeah.
So
So
it's still going up.
it's still going up. And that's all the from all the economists in that housing space.
Yep, that's what I was looking at.
Yeah.
And then the other thing that I see is, you know, we got to answer the question, is a recession coming?
I don't know. Hey, if we knew that, right, we would not be here. We'd be rich and retire a long time ago, right?
It,
That's a
you know,
crystal ball.
the indicators are way different is what I would say than, you know, that last one that did happen, our '08 problem. You know, we don't have financial issues around housing and subprime lending. That got taken care of and regulated, almost over-regulated, but it got regulated. And we have great, you know, we have unemployment rates that are phenomenal. You
Yes.
know, I think I read 50-year low.
Yes.
That's amazing, folks. And we have low mortgage rates. So I say don't sit there and wait it out till the prices get lower. You better get in.
I would say that in every market, regardless if it's good or bad, there are opportunities all
Yes.
the time. And it could be, we're not here to take advantage of someone's life circumstances, but it could be just that. I mean, I've had folks who were going through a divorce, and they're like, we don't care, get this thing off our hands as quick as possible, whatever. um, but in the market, there is, people talk about timing. It's like timing the stock market, same thing. But I think in terms of real estate, there are opportunities out there each and every day. And I would not look into like what's going to happen a year from now and so forth. No one knows. But I think it's going to be a great year for investment. And I'm seeing we're only 1 week into the year, and I'm seeing signs of that already, just in this last week.
Yeah, it's pretty amazing. So we're coming up on the top of the hour here. We're 1 minute out. And I just want to tell you a couple of things here. Anybody who's on here, you can, I'm going to share my screen here real quick. There we go. Right there. You can schedule a free strategy session with me, and I'll just chat with you about where you are and where you want to go in the real estate investing arena. And Jeannie, we're putting up a link there in the chat box if you want to grab that. And then here is Andy's contact information. If someone is interested in contacting Andy, I have that up on the screen for you. And one more thing, you can join our Facebook group. I have a Facebook group called LeAnn Riley Real Estate Investing, and it's just right there in Facebook. And in there, there's a lot of chat going on about just the kind of things we're talking about here. You can put a question in. I also post in there, I get a lot of real estate related stuff across my desk, so I'll share that. Stats about the mortgage rates or whatever. And so it's just a good place to kind of keep in touch with the investor market. And it's okay to put in there, hey, I need somebody who can, who do I get for checking the sewer pipe from the building to the street, that kind of thing. Other people might answer and give you a tip. So I just want to thank you for joining us tonight. And we'll be back next month. So I'll talk to you then. Bye-bye.